Because she is such a strong supporter of the industry's best-selling battery-powered vehicle, Cathie Wood advises against selling Tesla stock. However, why does she believe that investing in Tesla would be a grave mistake? She does, however, have some really strong arguments. Press the like and subscribe buttons before we hear more of what she has to say. In this manner, you can help us out and we can continue producing content of this caliber. Let's return to the video now. Tesla has issued a warning to its investors, advising them to hang on to their money despite months of ominous numbers. Now that the price of Tesla stock is finally rising, many investors may be thinking about selling it. But one knowledgeable stock picker seems to believe the company has a very bright future and that those who sell now could lose out. Cathie Wood is well known for employing the stock picking technique to concentrate on the future. She holds ownership in a number of recently publicized firms through her investment firm, ARK Invest, including Coinbase, DraftKings, Roku, Block, Teladoc Health, Tesla, and Zoom Video. Wood purchased the dip, putting her money where her calculations told her to. The price of Tesla shares had dropped at the time of the acquisition. After the Tesla Incorporated bull took advantage of a drop in the price of the electric vehicle stock following its findings, Wood paid an estimated $27.76 million for the shares. With the company's recent sell-off after the stock's all-time high, this was the first time the firm had bought Tesla shares. She has observed that traditional investment approaches typically underestimated the cost of ground breaking innovations. People who are more risk-adverse are only occasionally able to evaluate the opportunity or understand the disruption because they are unsure of the size of the potential return. Statistics show that even if not everyone can withstand the extreme volatility of this star, when a stock sank by 9% or more over the course of 5 days, it climbed by 62% or more over the next 5 days. Some people may find the emotional and financial costs associated with the market's fluctuations worthwhile, while for others, the risk is not worth it. Diversification is advised by most financial advisors as the bull market continues to set new records. Jason DeVault, like many other devoted Tesla fans, used to social media to express his happiness over his unanticipated Tesla windfall. The bull claims that he currently owns 14,850 shares of Tesla, which he bought in 2013 for $7.50 a share and paid an average of $58 for each. He believes his portfolio is currently worth $1 million. I don't think we'll see another Tesla in the next several years, the bull stated to Ram, because this company is only getting started. Wood wholeheartedly concurs with him and even asserts that Tesla's journey is only getting started. Data supports what Wood said in an interview that consumer preferences have shifted in favor of electric vehicles. According to Bloomberg New Energy Finance, the combined share of global car sales in the first half of 2021 of battery electric and plug-in hybrid vehicles was 7.2%, up from 2.6% in 2019 and 4.3% in 2020. Sales of electric cars were predicted to rise as GM, Ford, and other automakers would only provide emission-free automobiles by 2040. We're beginning to feel that if Tesla is the first to succeed in autonomous vehicles in the United States, Tesla will not only take the largest percentage of the electric vehicle industry, but we believe it may grab 20 to 25% of the whole auto market in 5 years. The spokesperson said in response to a question regarding the possible effects of Tesla's success in the American market for autonomous vehicles, she thinks there is a 50% probability that Tesla's attempts to develop autonomous driving will be successful, and that this is the most important aspect in achieving her 25-year target of $3,000 for Tesla shares. Additionally, she believes that in the future, autonomous cars working in self-driving taxi networks will put the vehicle's ability to transport people ahead of other considerations. When you take into account Tesla's rate of invention, you can see some semblance of reality in the future, especially given the state of the economy right now. Wood claims that Tesla is the Apple of the electric car business and that the company will soon control the majority of industry sales, much like Apple did in the smartphone market. Before to the entry of Intel, Motorola, and Nokia, Wood observes that Apple created their processor and hence still holds the lion's share of profits in the mobile phone business, whereas Intel and Qualcomm targeted the volume players. Our prediction for Tesla at this point is that its valuation will rise. This seems like a reasonable comparison given that Tesla is evolving into an AI robot company. According to experts, the introduction of AI-assisted driving has fundamentally changed our perception of cars and the driving experience. Tesla's share price is therefore only half of what it ought to be. There is a chance to flip the widely held myth about Tesla. In the coming years, the share price might triple if additional industry experts agree with this viewpoint. Even though Tesla is just a little over 10 years old, it has already taken the lead in the market and opened the door to a more environmentally friendly future. It has also drawn a good number of investors who are prepared to invest in its shares in the hopes of becoming wealthy. Wood argues that investors who are in it for the long run should look elsewhere if they are looking to make rapid money. She believes that the investment is justified by the company's promising future. She believes that it would be premature to sell today. It's not just Wood that promotes the company. Many have predicted that Tesla might soon rank among the most profitable automakers in the world due to a surge in the stock price and benefits from greater economies of scale. The coin price estimate predicts that Tesla shares will be valued at $2.5 million, or 287% of its current sales. Several analysts seem to concur, pointing to strong gold prices. Following his visit to the Tesla Gigafactory, Chowdhury kept his $1,500 price target and overweight rating in place. This is encouraging since it shows that the company's future expansion plans are moving forward as expected. Experts at Deloitte are similarly upbeat about the brand's future, stating that electric cars would make up approximately 32% of all new car sales if global EV manufacturing is expected to expand at a compound annual growth rate of 29% over the next 10 years. Additionally, given that Tesla now controls a sizable portion of the market, the company is expected to expand, given that their analysis projects that overall sales electric cars would increase from 2.5 to 1.2 million in 2025 and then to 3.1 million by 2030. The company's future is also anticipated by Wallet Investors' algorithm, which predicts rapid growth. Despite the possibility that Tesla stock will hit $2,948 in the upcoming year, this stock is regarded as a great long-term investment with a $1,270 price target. And lastly, is it time to sell your Tesla stock? It all boils down to principle. In our opinion, why not sell now if you would profit from it and you no longer believe in the brand? However, you would lose money if you continue to trust in Tesla. We sincerely think that you ought to hold. To make sure you're not throwing all your eggs into one basket, you should consider whether to sell or hold. Do you share Cathie Wood's opinion? To lessen the influence of any one industry and diversify your portfolio, will you be holding or selling your Tesla shares? Tell us in the comments and we'll get the conversation going there. This concludes the video. If it's useful to you, please hit like. In addition, if you're new here, you might want to subscribe to the Wall Street Games channel. We appreciate your time and hope to see you in our upcoming videos. Music. Because she is such a strong supporter of the industry's best-selling battery-powered vehicle, Cathie Wood advises against selling Tesla stock. However, why does she believe that investing in Tesla would be a grave mistake? She does, however, have some really strong arguments. Press the like and subscribe buttons before we hear more of what she has to say. In this manner, you can help us out and we can continue producing content